It is Monday night, July 23rd, and I wanted to make a quick update regarding the stock market tonight. I think we're at or very close to a potential um, breakdown point in the stock market here. So I want people to be aware of what's going on here. As far as the chart pattern, this is showing the Nasdaq Composite, but off of the March to April time frame, the market moved down here, and we've had this overlapping move up the last month or so. And it appears to be what would be called a flag formation in technical analysis, where you have the flag pole, so to speak, and then you have a parallelogram type of a channel. And until the market actually breaks below the lower border of that flag, we just have a possible flag. But today we had a big gap down the market. The indexes came down below or to the lower boundary, and they were able to rally up off and hold that support line at the bottom of the flag. But that's not to say that tomorrow or the next day the market may not come down and actually close below there. So any close below this blue line here would be indication that the flag has broken, and the projected typical chart projection of the move would be project the flagpole down from the breakout point. So let's say that's the flagpole, and we project that down from the break. Let's say it breaks tomorrow. So that would put the market down back to around the November lows there. And this is looking at the Nasdaq. All the indexes are pretty much showing the same thing. This is the New York Stock Exchange. This is the S&P 500. You could project those down there. So we'll be watching for that here over the next day or so. At this point, one thing I did want to note on that NASDAQ chart is this is a RSI study under here. The uptrend has already broken on the RSI. So if we look at these points there and we draw a trend line, that already broke on this price decline here, and then it retested that trend line from the underside on this price decline, and now it's coming back down. That's a pretty common pattern at the end of a rally, is to retest the trend line from the underside, and we're also under retesting this RSI uptrend line from the underside again, which we did in May as well, before this decline here. So that's something to look for as far as the NASDAQ. One thing I wanted to point out here, this is the Russell 2000 ETF IWM here. This is an hourly chart, but it did not make a new high above the, in this case, July 5th high this last week, whereas the, let me click over to the SPY ETF. This is a corresponding hourly chart. The S&P 500 and the Nasdaq 100 and the Dow, they all did make a slight new high compared to that high. But going back to the Russell 2000, it didn't, so it's in a relatively weak position, which means it didn't confirm the new highs. Smaller cap stocks or growth stocks may be in a weaker position going forward. And of note here is that the entire rally from July 12th up to July 19th there, so that whole week was completely wiped out in basically 2 days between Friday and Monday here. So the price logic has clearly shifted to down on this index, and that being so, oftentimes if this is truly a completed upward phase of the market and you get this price confirmation to the downside, you won't see this initial move retrace more than 61.8%. So as far as if you're looking at a short position or already short here, which I am, you definitely have the stops above that level. If the market comes all the way back up and breaks that level, that doesn't really confirm the analysis here that we'd be looking at a more extended decline. Let me click on there we go, SPY ETF. So the MACD on the hourly chart is now in oversold territory. However, we've seen it get lower on all of the last several significant declines here. It is starting to curl up a bit. It rallied pretty much all day after the initial gap down. The ADX line is rising, so we're in a miniature hourly downtrend here. What I would look for is definitely wait for this MACD to actually get close to crossing before even considering a long position. But if the S&P 500 and the Dow and the NASDAQ, if they come down below the prior week's lows here over the next couple of days, and let's put a specific time date on that. So if prior to this line here, so prior to July 27th, if the market is below that low, that would be an indication this price move down is stronger than that move up, and that we may be in a downward phase of the market there. So, mark that time frame out in your chart, but that's something to look for here. These pink lines here are the rally, the declines as far as this decline, this decline, this decline, and then there's even the subcomponent of this decline here. And what we can see is that as of this morning, the market had declined at an aggressively, faster rate than those lines there. What will typically happen is after you have a completed phase of the market and a new trend kicks off, you'll see the market move larger and faster than any of the counter trend movements. So, or any of the same direction movements during the counter trend rally. So in this case, let's say we're in a larger downtrend, but we have this counter trend movement up here. Well, if we do resume the actual downtrend, that should be confirmed by giving us a stronger movement than any of these downward moves here. So I've projected those down from the recent high, and really what that would indicate is to give us real good confirmation that there's a new down leg in force. We would want to be down around this 131 level on SPY by by close to the end of this week here. So that's just what I'm looking at. Those are the type of logical rules and ways to look at price that you can use to get some degree of certainty that price is actually telling you one thing or another instead of just guessing about the pattern and all that type of thing there. So that's pretty much what I wanted to point out here on this. The VIX took a big spike today, and the McClellan oscillator is also coming off of a nice divergence. So this is the McClellan oscillator here. This was the July 3rd peak in the McClellan oscillator. That's a measure of breadth through the number of advancing issues in stocks, but it's kind of smoothed or averaged out. And there was a dramatically lower peak at last week's high. And what you want to see is for a healthy rally is for that to make similar highs or higher highs. And when you see a dramatic divergence like that, that's usually unhealthy for stocks. We can see it's already back below the prior week's low, so that would be an indication that we could very well be in store for a correction here. And then if you look at the VIX took a big jump this morning. A lot of times when you see these big gap ups coming off of a low, there's some follow through to those. So we'll have to see. It did touch the upper Bollinger Band and pull back a little bit here, but the bands are kind of channeled. But if we see the bands start to expand a bit and this market move up and continue to hug that band or close outside that band again, you're going to see some price fireworks to the downside in that. So that's all for stocks. Let me give a brief update on gold here, and I'll do a video that's more detailed on this. I know I've talked about this in recent posts, but this is just such a potentially dramatic move that I want everybody to be aware of it here. This is a daily chart of continuous gold futures prices. There's a very solid support level set at around 1530, so between the September low from last year, the December low from last year, and then the May low from this year. If prices come down and break that low again, I believe there's a very high likelihood there's going to be some dramatic downside follow through on that. This is the projection of the base of this triangular type of topping pattern down from that, and that could happen relatively quickly as market movements go. So be aware of that on gold. The shorter term time frame shows that we're in a contracting triangle. So if you look at some of these trend lines here, they're contracting, and the Bollinger Bands are progressively squeezing down here. So the market's traded in a tight range for the last month. And what you want to look for is a breakout of this symmetrical triangle to determine the new trend direction. And one thing to note here is there's a Fed FOMC meeting this coming week, and I don't know what's going to come of that. I don't pay that much attention to those type of things. However, definitely, the market, both the stocks have been somewhat overlapping, not making much price progress, and gold has been trading in a very tight range for a few weeks here. So the market may be truly waiting or anticipating something, as far as some statement from that meeting. We're getting into the time frame where a breakout should happen very soon here. This line indicates it doesn't show up very well on this chart, but let's go to an hourly chart here. This line indicates the 50% time frame between the beginning of the symmetrical triangle and the apex point there. Once you get past that, close to 61.8 or 3/4 of that time, so the breakout window should be somewhere probably in this range here. Next week would be right around this level here, so I think we'll see that here within the next couple weeks. I'm thinking the likelihood is probably a downside breakout in gold, and actually have some put options on that, some out of the money put options to play that potential breakout. But the safer thing to do would be wait for it to actually break out, and then determine the trade based off of that. So that's all for this update. I'll try and do a more detailed update on gold here in the not too distant future.